Hello everyone and welcome. My name is Michael Wilson and I'm the webinar producer for KardasLarson. Today's session is HR Compliance, Are You Ready for 2016?
The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone and welcome. My name is Michael Wilson and I'm the webinar producer for KardasLarson. Today's session is HR Compliance, Are You Ready for 2016? In the next 30 minutes, we'll share an overview of federal and state proposed and mandated changes for 2016. All of these changes may have an impact on your organization's administrative efforts, payroll planning, and employee engagement. Now for a few housekeeping notes. Everyone on the line is muted by default. We encourage you to type your questions into the question box and we'll answer them along the way. You can tweet about this webinar using hashtag KardasLarson and hashtag HRCompliance. You can download the handouts provided before the end of the webinar. They're right in the GoToWebinar control panel. You'll see them under handouts. And we value your feedback, so please take the survey that you receive tomorrow, and attached to that email will be a recording of the webinar. Now let's meet your presenters. Lisa Schipani and Lois Krause have spent many years helping organizations of all types and sizes to successfully develop and grow both their people and their businesses. Lois has a special expertise in labor law management, while Lisa's proficiency is in leveraging employee performance and development. Both of your presenters are committed to helping you maximize performance. Now I'll turn it over to Lisa to begin the presentation.
Thank you, Michael, and good afternoon, everyone. We're so pleased that you're able to spend some time with us today. I know that you'll find this webinar very informative. Let's just quickly cover the objectives for today. We're going to talk about the ACA reporting for January 2016. As Lois will tell you, this is the first time that employers have had to do this reporting. We're also going to cover guidelines for employee versus contractor status. And we're going to talk about the mandated federal and Connecticut state minimum wage. We'll also devote a significant portion of time to the updates on the 2016 proposed FLSA changes. As Michael mentioned, we'll be talking about both mandated and proposed legislation today. So let's start with what we know and what's mandated. So help us get started, Lois.
Terrific, Lisa. The first thing I would like to discuss is the Patient Protection Affordable Care Act, PPACA, or better known as Obamacare, and the new reporting requirements. Yes, everyone is sick of hearing about this, but this year is when the reporting begins for 2015, and doing it improperly could incur hefty penalties. In January 2016, all large employers who had 100 or more FTEs, or full-time equivalent employees, in 2015 will be required to fill out a Form 1095-C, pictured here, for each employee who they provided medical insurance for, and give it to each employee by January 31st for 2016, a medical W-2, if you will. The organization will also be required to fill out a Form 1094-C, pictured here, to file with their tax forms to the IRS. Remember, this is for employers who had 100 or more full-time equivalent employees during 2015. In 2016, the number of full-time equivalent employees decreases to 50. We have included both forms pictured in our handouts on the webinar and have also attached the definition of what an FTE, or full-time equivalent, is, and a formula with an example to figure out how many full-time equivalent employees you have. Check out our handouts at the end of the session to ensure compliance. Please make sure you fill out each section of these forms properly and completely, because hefty fines could be incurred if these are not filled out. You may want to get some guidance and some help from some of your partners or vendors, perhaps your payroll company, your accountant, your benefits broker, or tax preparation professional, to ensure that this is all filled out properly. Many of these outside vendors can be very helpful to ensure proper compliance. Remember, the PPACA is a tax law, first and foremost. No one wants to incur the wrath of the IRS.
Thank you, Lois. And as Lois mentioned, there are two critical documents here, the 1094-C to be completed and filed with your 2015 tax information, and the 1095 C, completed and distributed to your employees by January 31st, 2016. Let's stop for a moment and answer any questions that you might have on these two documents. Michael, what do you have for us?
The first question for Lois is, do nonprofits need to fill these out as well?
Well, nonprofits that had 100 or more full-time equivalent employees and provided medical benefits for their employees have to fill these out. They are not different from anybody else. They are required to fill these forms out. Same as they would for just to say that they're not say that they're a nonprofit doesn't mean anything. They still have to fill these out.
Another question that we have says, I have 55 employees. Will I need to do this next year?
If you maintain the 55 employees, yes, you will need to do this next year. And also, if you decide to reduce your number to below the 50, just so you don't have to fill out the forms, you could be in non-compliance and you can be audited and fined for that.
Okay, thank you, Lois.
Thank you for those great questions. Let's move on. We've been hearing a lot about the new guidelines for employee contractor status in 2015. What is the impact on employers, Lois?
Well, there are numerous factors to consider when deciding if someone is an employee or an independent contractor. And there are both federal and state tests to be considered. Although the new guidelines are for the federal government, those will affect the Connecticut state guidelines as well. Connecticut is quite a bit more strict with their guidelines than the federal government, and you may already be in compliance if you follow the Connecticut regulations to the letter. Connecticut actually currently has a rule that if an independent person works on your premises, they are an employee and there are no other tests to apply. However, if the person is working with you from a bona fide consulting company like KardasLarson, LLC, you should not be concerned. Previously, the factors for the federal regulations, taken all together, placed an emphasis on control.
Lois, tell our participants what you mean by control.
Well, control means if you have control over the time of day the person works, where they work, what electronics or workstation they work at, and whether they can make their own schedule. Most consultants do some work at the client's office, some at their own office, and sometimes out in the field, depending on the organization and the situation. The new guidance puts the emphasis on whether a person is financially dependent on the employer and would be an employee, or is really in business for him or herself, who would be a contractor. All factors must be evaluated in every case to make the correct determination. So if it looks like a duck, walks like a duck, and quacks like a duck, it's probably a duck, or in this case, an employee. Control will still be considered, but if this person is a singular person acting on their own behalf and are totally dependent on this company for their financial security, even if they started out as a contractor, and this organization became their only client, it may be time to investigate hiring them as an employee. We are currently helping some clients to do this analysis to enable them to be compliant. We want everyone to be careful as the penalties can be very costly. If the consultant decides they now want to be an employee and have all of the benefits they see the others they are working side by side with getting, like vacations, sick time, medical, dental insurance, 401k, and those matches and the like, they may themselves go to the Department of Labor and complain that they should be an employee. Then there may be an audit, and you may have to pay up to 3 years of back payroll taxes and the equivalent of the benefits they missed. The organization may also be charged a punitive fine, so be very careful. And give us a call. We're here to help.
Thank you, Lois. Sounds like a good time for organizations to review all their contractor relationships. So let's move on. I've heard that minimum wage is increasing in the coming year as well.
Yes, Lisa. The federal minimum wage requirements for 2016 will remain the same as in 2015 at $7.25 per hour. The Connecticut state minimum is being raised to $9.60 per hour. The federal government requested input and support for the increase of minimum wage in 2015, but most of the information they received stated that increasing the minimum wage would be detrimental to the overall business climate in the country. The thinking from business was that if it were an increase in minimum wages, jobs would be lost, and that would hurt the overall economy. We are not economists, so we will just report the basic information directly from the federal and state departments of labor. However, the federal government, through an executive order, created a mandate for federal contractors that began in 2015. All organizations that are classified as federal contractors providing goods or services with bona fide contracts to the government were required to pay a minimum wage of $10.10 per hour for each employee in 2015. This order was instituted as of January 1st, 2015, and the minimum is being raised to $10.15 per hour as of January 1st of 2016. So all of you out there that are government contractors, be sure you raise your minimum wage to $10.15 per hour by January 1st. Check out our website, KardasLarson.com, to download the minimum wage posters. We have both federal and Connecticut state posters on our site for you to download free of charge. We do not have the new federal contractor poster yet because the new poster has not been released by the Federal Department of Labor. Stay tuned and check out our website often to get the latest posters.
Thanks for that great update, Lois. Let's take a moment again and answer any questions that our participants might have regarding employee contractor status and the minimum wage increases. What do you have out there, Michael?
All right, one here that I'll try to read. It says, a town and a board of education have different FEINs. Both entities share the same self-insured health plan. I've been told that the town, which does not meet the threshold for reporting because we are only part of the entity we're considered part of, therefore you must report. What do you think?
Could you read the, okay, they have two EINs?
Yes. The town and a board of education have different.
Two different EINs.
Yeah.
But they share the same
self-insured health plan.
Self-insured health plan. Yes, because they're both self-insured. It's the same self-insured health plan.
That's what it says.
I am not positive about this, and I would be happy if you would contact me directly to research it for you. But I think because you're both covered under the same self-insured health plan, that you would that you would have to do the reporting on this, even though they're two separate EINs.
Okay, we had another question.
But I will definitely research that.
Okay, our next question is asking you to clarify that it was federal contractors or Connecticut contractors for that minimum wage update.
No, these are federal contractors.
Okay.
This is the federal government. This is a federal executive order.
And another question asking if it is just the Connecticut state minimum wage that's increasing at the state level, or are there other states increasing theirs as well?
There are some other states that are increasing as well. I don't have all of them listed here, but I could research that for you as well and get back to you if you contact me after the webinar.
Okay, thank you, Lois.
All right, great. Terrific questions, and now we're going to move on. Lois, I know that we've been talking with our clients about proposed changes to minimum exempt pay and duties tests. We're encouraging them to prepare now, as this legislation could be very costly for organizations, and it also may have a quick turnaround time. What can you tell us about these proposed changes?
Well, Lisa, I would first like to give you all a brief mini class in the Fair Labor Standards Act, an FLSA 101, you could say, so you understand exactly what the big concern is. For those of you who are well acquainted with the FLSA regulations, please bear with us for a moment. There are two categories of employee under this act: exempt, salaried, and non-exempt, hourly or on the clock. There is actually slightly a third category, a non-exempt salaried category, but that category receives a salary but is not exempt from overtime. They follow most of the guidelines of hourly workers. The idea is that hourly workers, or non-exempt, should receive regular hourly pay plus overtime paid at least 1.5 times their regular hourly rate for any hours over 40 hours in a week. An exempt employee is exempt from the overtime rule, but there are certain tests, salary and duties, to apply to the evaluation of this category. To be exempt from overtime, you must fall into one of the following categories: executive, administrative, outside sales, professional, information technology, artistic, and highly compensated for the federal guidelines. And for the Connecticut state law, the information technology and the artistic are not recognized, so they must be declared eligible under another category to be non-exempt. To be exempt, rather.
Thank you for that refresher, Lois. So tell us about the proposed changes.
The proposed changes are in the salary test for the exemption. It has been proposed that the weekly required salary increase go from $455 per week, which equates to approximately $23,660 a year, to $970 per week, which equates to $50,440 per year. That is a 113% increase. The state of Connecticut currently has a minimum of $475 per week, but has not suggested any increase over the federal proposed minimum as yet, but we suspect that to be a bit higher than the eventual federal minimum, but only slightly. This could have a severe impact on small organizations' budgets, or any organization's budget. Keep in mind that this FLSA Act has not been adjusted at all since 2004. KardasLarson is currently working with some of our clients to do this analysis to help them plan for the 2016 payroll budget. Many organizations have lower-level supervisors that manage multiple people covered under executive exemption, but are currently making less than $50,000 a year. There are also some retail store managers who routinely make less than $50,000 per year, and that will require their organization, if this is implemented as proposed, to either put them on the clock, which will make them subject to overtime rules, or raise their base pay. If they are non-exempt salaried employees, they are already having their hours tracked for overtime purposes. So this may seem like a minor problem, but there may be some employee communication or cultural issues that could arise. Lisa, I know you've been working with some clients on some of these communication and cultural issues. So why don't you explain the possible ramifications of this type of change?
Lois is absolutely right. The impact of this change, which is much needed, has both a financial and an emotional component, which could affect employee engagement. Once you complete your organizational analysis, you may decide to change the status of some employees from exempt to non-exempt. These employees may perceive this change as a demotion, and their morale could be affected. So after you do your analysis, we recommend that you create a well-designed change communication and implementation plan so that your leadership team, direct supervisors, and employees all understand the reason for the change that is being led by the federal government. We're working with clients today as they are proactively doing the analysis and determining their compensation strategy. We will then partner with the leadership team on a change plan that involves plenty of training and communication to the organization. The key will be effective two-way communication with each and every affected employee. And leadership in the organization will truly need to wrap their arms around the new guidelines and be prepared to answer questions and help their employees through this change.
Thank you for that, Lisa. And I just wanted to add that the amount for the highly compensated exemption was proposed to go from $100,000 a year to $122,148 per year. And they have also stated that for the first time, there will be automatic increase to the minimum salary test reviewed yearly to coincide with the 40th percentile of the working population. We believe the duties tests for the exemption in the different categories will remain constant, although we believe the amount of employees to manage needed to satisfy part of the executive exemption may increase to 3 or more, up from 2 or more. But they have not decided on changes to that as yet, or even if there will be changes. The Federal Department of Labor solicited ideas from the public to decide how best to address those tests. KardasLarson can help you with those as well. Please remember that the state of Connecticut have tougher duties tests for exemptions. As I said before, they do not recognize the artistic or the information technology exemptions that the federal FLSA regulations approve of. But wait, there's more. Independent of these proposed changes, the Federal Department of Labor also released some new guidance about overtime rules for checking emails at home. Many employees are given smartphones, tablets, or laptops by their organizations to be able to be connected 24/7. The guidance release suggests that someone that is non-exempt, hourly, or subject to overtime, and is given a phone, etc., by their organization to receive emails, etc., at home while they're off the clock, so to speak, the organization needs to put a technical tracking on the phone or system to be able to check the time that was devoted to this off-the-clock organizational work. So the appropriate amount of overtime can be calculated and paid to the employee. If it is under the 15-minute time frame, there really isn't a concern. But if it's 15 minutes or more, it needs to be tracked and paid as overtime. So be very careful about what you ask your employees to do while they're off the clock.
Wow, Lois, these are some really big changes that have a far-reaching impact on organizations. When we started this conversation, Lois, we said that these are proposed changes and organizations should begin preparing for them. So where are we at this point?
Well, Lisa, due to all of the feedback the Federal Department of Labor received from many different sources on all of these proposed changes, they have not implemented the changes. And based on numerous organizations like SHRM, HR Dive, and some national law firms who publish opinions, the expected release of these new regulations will be in the second half of 2016, after June. As a matter of fact, I just read an article this morning saying that it would definitely be in the second half of the year. As the release will be later than the government originally wanted, and based on the opinions of the same organizations mentioned previously, we do not believe there will be much time allotted for implementation, probably 30 days or less. As this is such a quick turnaround time, we recommend that everyone should begin to do an analysis in advance of the final release to be able to implement the required changes within the tight time frame. We suggest looking at all of your job descriptions in regard to the current duties and then develop a compensation strategy to address the proposed changes as suggested. Please ensure that your current job descriptions are reflective of the actual duties your employees perform in that position before moving forward with the rest of the analysis. We are currently working with some clients to do all of this analysis and to develop these plans. And if you need some help, give KardasLarson a call.
Thank you, Lois. That's a lot of information for our participants. And so at this point, we're going to open it up for some more questions.
Sure. So our first question was asking for more information on when we think those changes will come. And Lois, you mentioned it would be the second half of next year. So I think we can move on from that. The next question is the 15-minute threshold for email at home cumulative or separate? For instance, if an employee answers 20 emails at 1 minute apiece, do we need to pay 20 minutes and calculate OT?
It's cumulative. They should only, if somebody just works for 3 minutes, is not a big deal, but it would be cumulative unless it was over the course of like 3 days kind of thing. If it was over the weekend, and it was only like one here, one there, and it was 15 minutes. But if they devoted 15 minutes or more at one time, or within a short period of time, I would have to say it would be cumulative.
Okay, if anyone has any other questions, you can just type them in using your questions box. Try and answer as many as we can before we're out of time. All right, it looks like we've answered everything that's come in. Lisa, I'll give it back to you.
All righty, thank you very much. Okay, well, thank you everyone for your time. If you leave this webinar and think of additional questions, please reach out to Lois and I, and we'll be more than happy to answer them for you. And Michael will take us through some final thoughts.
Thank you all for attending this KardasLarson webinar. We encourage you to follow KardasLarson on LinkedIn to receive information on future webinars, compliance updates, and our speaking engagements. Please be on the lookout for an email tomorrow with a survey and a recording of this presentation. We are now signing off. Thank you.